Okay, so this is the last part of chapter 2 for the subject Church Financial Management. So we have here a sample of financial statements. Okay, so again, composition of financial statements. We have five. The statement of financial position or the balance sheet, the statement of activities or the income statement, statement of cash flows, and then you have your statement of changes in the contribution or equity. And then we have the last one, notes to financial statements. Okay. So this is a sample report of an independent auditor. Again, the SEC requires corporations to submit annually an audited financial statements. Okay, and then at the front or cover of the financial statements is the report of independent auditor. Okay, and then essentially they would report here that they have inspected or audited the financial records of the church, and that they would give an opinion on whether they follow the standards or not. They could give unqualified or qualified opinion. Unqualified is the good type of opinion, and then qualified if they are unable to what do you call it? If they are unable to audit certain parts of the business, so they might be tempted to give qualified opinion. Yeah, and then they would specify which aspects of the business they were unable to audit. Okay, and then there's this statement of management's responsibility for the financial statements. Essentially, it is the management of the organization or the church to prepare the financial statements to be audited. Okay, and then if they are expected to cooperate with the auditor, and then if there's any uncooperative person, or if there's anything that the management of the church is unable to explain properly to the auditor, then that would be seen as suspicious, as if they've committed something wrong or maybe something fraudulent, and that would prompt the auditor to issue qualified opinion. Okay, so this the management's responsibility for financial statements, they would need to make this particular statement. Preparation and fair presentation of financial statements that are in what's this? That are free from material misstatement, whether due to fraud or error. Okay, so that later on, if there's an issue and then they're found to be uh, defrauding something, or if they're found to be committing fraud affecting a lot of people, or maybe something like that. So essentially, the responsible party would be the management. Okay, but in case there are, suspicious things, and then the auditor issued unqualified opinion, meaning they did not, they're saying they did not see anything suspicious, even if they did. So sometimes they might bear some responsibility as well. Okay, if the investigation shows that they have neglected to, discover such frauds when they are quite clear, could clearly be seen. Okay, in accounting, there are accounting and auditing. There are many ways to easily find attempts to defraud or misstate, or you know um improperly record financial transactions. Okay, so it will be easy to see, okay, for an auditor and an accountant. Auditor's responsibility, so express opinion on the FS based on their audit, and they conducted audit based on auditing standards and that kind of thing. Okay, and then their opinion. The statement is that the FS referred to above present fairly in all material respects. The financial position, da 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 da. Okay, so this statement, this is unqualified. Present fairly in all material respects. That's the best kind of opinion, audit opinion, that an organization can receive. Okay. Okay, and then attached would be the components of the financial statement. So you have the statement of financial position showing the assets, the liabilities, and then the net assets. So again, it's also called a balance sheet because the total assets, 31.59 million, should be equal to the total of liabilities and net assets. Okay. And then if you see here, the line items, cash, cash equivalents, certificate of deposits, cash and investments, restricted for long-term purposes. So it's separated from, the unrestricted cash. Then you have PPE and then other assets. For liabilities, you have accounts payable, accrued expenses, unearned revenue, note payable. Okay, and then for the net assets, separate classification for with donor restrictions and without. Okay, and then for the without, you have your undesignated and then you have your board designated. Essentially, what this means is that the management has decided to set aside a portion for a specific purpose. Okay, so designated. For example, they set aside 700,000 for purchasing a vehicle next year. Okay, so that's why they presented it here, right? So that's an example. So here you can see the liquidity of the company. How much cash do they have? Okay. And then this is for a given point in time. And normally this is for, the last day of the year at the year end. Okay. Next, we have the statement of activities. You have your revenues, contributions, tuition, other sources of funds, donations, gain on investments. And then you have your expenses for the programs, activities, supporting activities, salaries and wages of the church workers, fundraising, whatever, okay? And then you have 3 columns here, one for without donor restrictions and then one with donor restrictions. Okay, and then you have the total, right? So from here, what can you say? If you're going to use this in preparing your budget, so this is for 1 year, right? And you'd like to know how much does the church need for 1 month. So you simply divide this, the expenses, divide that by 12. Okay, you can get the monthly expense of the church, and then for the contributions, you can also divide it by 12 for you to get an idea how much is the average contributions made every month. Okay, and that would give you a smaller, how do you call that? More focus in looking at the finances of the company. So when you create your budget, okay, when you look at the liquidity, you can see, let's say, cash and cash equivalents. This is at the end of the year, right? You have 3.2 million, but for a month, you would need, let's say, 1 to 2 million for the expenses. Okay, that's just an example anyway. Okay, so at you would have to compare this to this one to check if you have enough cash for next month's operating expenses. Okay, supposing that the contributions may not be received immediately, okay, because the members would contribute evenly during the month, or maybe sometimes some of them would contribute at the end of the month, so the expenses cannot wait for the end of the month, so the available cash would have to shoulder the expenses for the coming month, okay, from the cash on hand and not waiting for the contributions to come. Okay, so that's just one way of using this information. Okay, and of course you have to make sure you have enough cash to pay off the monthly what do you call that, monthly installment for the liabilities, if any. Okay, and then if there are temporarily restricted donations which would be used in the coming months or in the next year, so you have to make sure you have enough cash on hand or any form of asset which can be convertible into cash immediately, okay, so that it can be used for that purpose. Okay. Next, we have statement of functional expenses. So essentially, this is, the expenses classified into the different types of expense. So what's this? Personnel, utilities, grants for missions, what's this? Supplies, depreciation, travel, office expenses, others, interest expense, media and promotion, professional fees. Okay. And then normally you have this: church, school, total program activities, general, fundraising, totals. Okay. But in the case of GBC and BBC, separate accounting for, two separate entities. They try not to, mix up the records and the funds, which is good actually. Next, ABC Church statement of cash flows. Okay, so you have your inflows, cash received from contributions, and then your outflows, used in operations. So you have this negative. Okay, and then investing, what do you call that? Normally these are for non-current assets, acquisition or disposition. So investments, long-term investments, property, plant, and equipment. Cash inflows, cash outflows. Financing cash flows proceeds from contributions restricted for investments, principal payment and debts, anything related to non-current liabilities, and the net assets. Okay, and then you have your net change in cash and cash equivalents. You have your beginning, and then you have your ending. Okay, of course, this ending must be the same as the one in your statement of financial position. Okay, this one, ending cash balance. Here in the Philippines, the SEC, the required AFS, normally they require, comparative figures for the current year and the previous year, so that you can easily compare the figures and see if there is, significant change on a given account. Okay. If there's any significant change, it would, allow the management to give their attention to that particular account. Okay, why is it that there's a big change in, let's say, cash? Okay, or there's a big change in the liabilities. So it can just say that the church paid off its remaining liabilities. Okay, it managed to raise enough money for it. Okay, so there must be explanations for such deviations. Okay. And then last is the notes to financial statement. So there are, explanations, nature of activities, a church. So the purpose, when it was incorporated, what are the activities that they do. So here, summary of significant accounting policies, revenue recognition, cash and cash equivalents, certain accounting standards. Normally, this would be added by the auditor. Okay. Use of estimates. Let's say you only estimate that vehicles are to be used for 10 years, equipments are for 5 years, things like that. Subsequent events. Okay. Liquidity and available resources. So you have your cash. Okay. Concentrations, cash and investment. So breakdown. Fair value measurements. Okay. Some of these are, very technical, but sometimes not really used when reading financial statements. So property and equipment, breakdown into the different types of PPE. Note payable, breakdown with regards to aging. How much of these were, very old? How much of these were from current year? Okay, and then you have your net assets with honor restrictions. Can also include, what are the restrictions to them. And then other items, tuition, retirement plan. All right, so that's it. Okay, essentially the notes would explain further the contents of, the first four components of the financial statement. Okay. So I'm unable to give certain situations, but maybe later. I would add more. Okay, maybe when we do an activity with regards to financial statements. All right, so that's already 50 minutes again. I'm going to end this one. Okay. We'll pause here and maybe continue on to chapter 3 later on. So thank you and bye.